Yeah, so today was the first full year results for Haleon, and we feel great about that organic revenue growth, which was plus 9%. And I think that volume mix of 4.7% and pricing 4.3% is a real testament to the role that health plays for consumers. Health really matters, and the fantastic brand portfolio we have. So, and brands like Advil, Panadol, Sensodyne toothpaste. So fantastic portfolio and really resilient brands. As we look at 2023, we continue to strive to have a balance between price, volume, and mix. And we expect to have that in 2023. We expect it to be a little more skewed towards pricing in 23, but we still expect to see volume growth in the year.
Let's tackle the risk from here, because as I was scrolling through your results, I got to the litigation part, and I thought it would say Zantac, but it didn't. I know that you've made a lot of comments to date. We saw in December, pretty key for the markets. The federal judge threw out thousands of lawsuits effectively over Zantac, and we saw Barclays on the back of it upgrading the stock. But still, there were these comments back from the industry, and this was indemnification requests from GSK and Pfizer. It feels like it hasn't completely gone away. How do we think about this?
At our half-year results, we were clear on where we stood on Zantac. First of all, we're not a defendant in those cases. We never marketed Zantac in the U.S. or Canada.
This is your position, but other companies like GSK and Pfizer think you could be on the hook.
Yeah, absolutely. We disagree with that. And as you said, the first Daubert hearings that came out eliminated a bunch of those cases. There are still cases that are out there. Not something we focus on that much, to be honest with you, because we don't see that liability. We're not provisioning for it. We don't see that as a liability for us going forward. And our focus is really to deliver on the great potential of this business that we built.
Yeah, hard to argue. In fact, I'm not going to argue. I'm going to say well done on the organic growth of 9% and the 10.1% organic growth from the positive power brand performance across the portfolio. And yet, why is it going to half in 2023? 4 to 6% is what you're guiding. That is a dramatic decline, Brian.
Well, if you step back a year ago, we set out medium-term guidance for the business in our Capital Markets Day. 4 to 6% organic sales growth, moderate margin expansion at constant currency, strong cash flows. And this year, we delivered 140% cash flow conversion and getting our net debt down below 3 by the end of 2024. We announced today we're down to 3.6 times, and we expect to be ahead of that pace of below 3 by the end of 2024. We feel good, and I feel very confident in that 4 to 6% annual sales growth and the 4 to 6% growth in 2023 in a very tough macroeconomic environment.
You're not doing that old Wall Street trick, are you, of call it down and beat miraculously at the last minute?
No, listen, that's a really good sales growth for a consumer company like we have.
It is, and I've studied.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.